The Taiwanese index is trading with gains of 1%.
The government is currently considering mechanisms, including arbitration, to deal effectively with tax litigation.
The Nifty should not break the low of 23,263.
Zomato will be replacing JSW Steel.
You've got the Nifty Bank, which is up about 1.3%.
We are looking forward to a very stable, I would like to say infrastructure-led, which was already the case, but stronger infrastructure-led growth taking place in our city.
Capex has been really low in the first half of the year.
संविधान के 75वें वर्ष की उसके उत्सव की मिलकर के शुरुआत करेंगे.
Fantastic recovery, right? From Friday's low to today, the Nifty's added on close to about 1,000 points.
16 legislations have been lined up for this winter session of Parliament.
You've come back to markets which are higher, but now though slightly off from the highs of the day.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
You're with us here on a fresh new edition of Closing Bell. That was the day so far, and it has been a pretty solid day from the word go. Not at the day's highest point, but somewhere in the middle of the range is where we're trading at. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel, and Rima is joining us back from Japan, I should say. I was going to say from Japan, but...
Welcome back. Well, happy to be back.
Well, I think, Rima, we'll let you do the hard work today. We're just going to sit back and, But anyway, it's looking good. And, 300 plus points on the Nifty. And guess what? It's interesting that the day's high today is exactly the 40-day exponential moving average. We started 300 points higher. It became 400. At 400, we basically hit the 40-day. That's the level we put out in the morning. 24,346 is that level. I think the high is 24,351. Just about a 5-6 point overshoot. And then, of course, the market's cooled off from there. But 300 points on it. For the Nifty Bank, we are trading. I mean, of course, there was an overshoot of the 50% retracement level. 52,127 is that number. But now we are trading below the 50% retracement. This is the retracement of the entire fall from the all-time high to the beg your pardon, retracement of the rally from the lows to the move higher. So that is 52,127, and we are now trading under it. Mid-cap and small-cap indices, the last I checked, about 1.7, 1.8% gains on both these respectively. And PSUs are making a comeback, and how? All shape and size, all sectors. Look at defense, PSU banks, and so on and so forth. So big action, at least today, that is very, very much out there on the table. Rima.
Hi, so as we speak, we're about 150 points off from the session highs on the Nifty. The Nifty high today was 24,350. Right now, we're at 24,200. The Nifty Bank, too, which was up more than 1,000 points. In fact, it was 1150-point gain on the Nifty Bank at its peak. The rally is still strong, but it's fizzled out a tad bit. Now 900 points going strong for the Nifty Bank. The advanced decline ratio is pretty good. Lots of individual stories. Some of these IT names are correcting now, large cap IT names. So if you pull up in the frontline pack, you've got Infosys, Tech Mahindra, HCL Tech. They've all dipped into the red. JSW Steel is your top Nifty loser, as Zomato is all set to replace JSW Steel in the sensex. And Zomato's stock has rallied close to about 5 to 6%. Adani Group stocks are recovering. Some of last week's cuts, and most of them are holding up in the green. But of course, top honors go to the PSU basket.
Oh, absolutely. It has been the PSU/Capex/Infra, that side of the market that's gotten most excited after this Maharashtra verdict, and that's what we were discussing in the morning as well. How long it lasts is obviously anyone's guess as of now, but you've got big moves. Today, so there is the entire PSU space. Railways in particular have been doing extremely well. Watch out for some of these stocks. So the top volume plus price gainers still include names like RailTel. There's been RITES, which has been up and about. Names like IFCI from the PSU basket, something like a Central Bank of India. Of course, Central Bank of India has the added impetus are getting into insurance, formulating that JV with Generali. But in general, look at BOB, look at IDBI Bank, PSU banks, even within the PSU basket, it is PSU banks that have done the best today. Some really rock solid gains continuing. And outside PSU, look at a name like J. Kumar Infra now, for very obvious reasons, or IRB. Again, the Maharashtra impact is leading the market to believe that there could be more orders, more infrastructure focus in the days and weeks and months ahead. And some of these stocks have been doing really well. But I guess the proof of the pudding is in the eating, Nigel. And the eating is whether we can digest the gains and go home in the green. We're off 150 from the peak. Actually, global markets are very, very supportive. So the bulls do have that on their side. US futures are also higher. Let's see if we can close out positive.
Well, that's right. And let's see what the flows picture is, right? Because the FIs have been sellers and they've been net short. So today, is there another short squeeze that's taken place, or are they better sellers in today's trading session? So at around 6 p.m., we'll be getting the exchange data on the cash market, and on the FNO data at around 7:30. We'll keep you updated on that front as well. How do you trade, though? Final hour of trade coming up. Midesh Thakkar is back with us. Midesh, decent day, right? I mean, we were up close to 400 points at one point of time. We're still up close to 300 points, which isn't bad. The trend is still up?
Very good day. Same thing, we had a big rally on the Nifty on Friday as well, when the markets from the lows, rallied by nearly about 600 odd points and then another 400 points up. So giving up 150 points is not a big deal after nearly 1,000 point kind of rally. So I think for me it's a very good day. Now, one, the short-term texture becomes buy on declines. To me, ending close to about 24,100 on the spot, we had a low of around 24,135 today. 24,100 on the spot, about 24,075 is a buying zone. And I believe that, unless the market starts breaking below 24,000, 23,980, I think the short-term current will be on the upside. So stay positive in that sense. I think, very clearly this could test 24,500. And if we start getting past that, then I think there could be further upsides happening as well. So my advice is very clearly on the upside.
And stocks specifically, Mitesh?
Yeah, on the stock side, if you just allow me, I would have a buy on BEL Limited with a stop at about 286 for targets of 304 to about 305. And the second stock which I would recommend is from the refining side, which is HPCL. I would recommend buying here with a stop below levels of 369 for targets of 390.
Okay, both PSUs there. So Mitesh going with the PSU theme itself. Got it. We'll come back to you, Mitesh, for some more ideas in a bit. But talking about PSUs, the one big sort of fulcrum of the whole action today has been around the railway space. Railway stocks are higher. Many of them, like we pointed out, RVNL rights, all of them up and about. Along with the momentum and the sentiment, there's also order win announcements that came in over the weekend. So let's go across to Vamakshi for all the details. Vamakshi.
Well, Surbhi, when you look at RITES, they've received revised estimates for its railway electrification project from Northeast Frontier Railway. The revised total cost have been increased to 532 odd crores from 288 crores earlier. So this bodes well for RITES. But apart from that, RVNL also on our radar, and that is because its JV with HCPL has received an LOA from Eastern Railway. This is for a project worth 838 crores. Now, RVNL's share in this JV is at 76%. So therefore, its share in the overall project is expected to be at 637 crores. And this project is for works in connection with construction of multi-tracking railway broad gauge railway line. And the project is expected to be completed over the next 36 months. So order win coming in for RVNL and a revision in estimates coming in for RITES.
Thank you very much for that. Dipan Mehta from Elixir Equities is now with us on the show. Dipan, the belief is that now capex will finally pick up, and plus railway stocks had corrected significantly. Any of them you would go out there and buy?
Yeah, Rima, good afternoon and thank you for having me on your show. I think, yeah, sentimentally positive for all PSU capital goods companies because since, May, June, we have been seeing slowing down of government expenditure. And now that a major state election is over and done with, one could expect the government to step on the pedal. But look, valuations are fair in these companies. And even if they're sitting on big order book positions, there are always execution issues and volatility in their earnings. And I don't think that risk factor is captured in the valuation as of now. So I'm not going ahead and buying any of the railway stocks or the defense PSUs or the other engineering PSUs. I think that a correction has got some more way to go, and these stocks would be a more attractive and better risk return profile when there's a correction, maybe not at these levels, especially not under such euphoric conditions.
Got it. Okay. All right. Deepan, I want to understand whether or not, you're interested in some of these infra-related themes. So, we'll ask you about them in just a bit. But the BSE, along with 4 other Indian securities, will now be part of the MSCI Global Standard Index. Changes to the sensex have been announced. Vivek is with us to fill us in with more details. Vivek?
Well, that's right. So, post market hours on Friday, you actually saw a couple of announcements coming in, both from BSE as well as FTSE. BSE, one important change, and that had quite a significant impact on the stock prices of both Zomato as well as JSW Steel. So Zomato comes in to the sensex, and this is effective of Monday, December 23rd, 2024. IFL estimates close to $450 million of inflows will come into Zomato. JSW Steel, on the other hand, could see outflows of close to $250 million. These are passive fund flows that we're talking about. Now, along with that, FTSE, remember this particular index review largely takes into account IPOs as well as spin-offs. So 2 recently listed companies, both Bharti Hexacom as well as GoDigit, are inclusions to the FTSE indices. Now, talking about MSCI, in the next half hour or so, you will see the rejig or the rebalancing take place. Significant volume activity will be seen in all of the 5 names. These 5 names have been added to the MSCI Global Standard Index. Voltas, BSE, Alchem, Oberoi Realty, Kalyan Jewellers, of which BSE is expecting inflows of close to $236 million, Voltas close to $282 million. Remember, a lot of fund managers have already started positioning, so there could be certain volatility, of course, and there could also be some reversal of those active fund positions that have been taken, especially in the last half hour of the trading session. Along with that, one stock that is expecting heightened volume activity will be HDFC Bank, close to $1.7 billion of inflow expected in the last hour of trading session today, and this is on account of the second tranche of the weight increase that HDFC is seeing after the HDFC Bank merger. Along with this, India now becomes the second largest weight as far as the MSCI EM is concerned. 19.8% is where India's weightage in the MSCI EM basket will now stand after today's rejig.
Okay, all right. Thanks a lot for that, Vivek. Deepan, a view on any of these names?
No, actually, that a view on steel is negative. So, I mean, look, this is what the index is telling you, that it is going in for new generation businesses, and the commodities are getting lesser and lesser weightage. So, in what more can I say? I think these are mature. Steel and aluminium, cement are now mature businesses. You cannot make a lot of wealth over there. But who knows, with a Zomato already been a multi-bagger, it can go up even further. And these are businesses, these technology businesses, platform businesses, have got a runway for 5-10 years or so. And if you're a patient investor, and if everything goes right for them, competitive levels are less, and they get into more and more categories, then these companies can deliver very good returns going forward as well. But, one has to take into account that more and more contribution will come from new generation companies rather than the old economy businesses.
Absolutely, point taken. I think we want to change that flash. Will not make any new financial contribution. I think that's what the flash should say, not news, as part of investments. That's Total Energies, which of course is an investor in some of the Adani Group companies. By the way, I don't know if you guys saw where we were talking about Zomato. Amazon is apparently coming out with its quick commerce platform called Tez. It's launching, I think, in the next couple of weeks.
Okay. Heightened competition, getting intense.
Zepto raised for that round, $350 million. Tez is coming. Actually, you wonder sometimes, and that's what they say, right? Larger the organization, greater the time it takes to, sort of capitalize or actually decide and move forward in a very aggressive way. I mean, I guess they were all waiting to see if this is a real thing, quick commerce and 10-minute deliveries, etc. But obviously it is.
But the worry is that once the big giants start moving, they move with so much of money, muscle, power, might, and simply, cash to deploy, that you wonder if that starts changing the dynamics of the game. By the way, the platform fee, guys, if you noticed or not, I did. Platform fee on Swiggy now is 10 rupees.
Okay.
From zero a couple of years back. Yeah, on every transaction that you're doing. So, yeah.
So there is a platform fee, and of course, I mean, as sometimes this comes up, right? Social media angst that the food that you order on these platforms is, I mean, if you order directly from the restaurant, the food itself is more expensive in that sense, right? So, yeah, I mean, you know, all of those things are variables, but I found it interesting. It's called Taze, the Amazon quick commerce platform, launched in the next couple of weeks, and we'll have to see. This is, I think now the flashes are coming, the revised ones. Was not made aware of existence of an investigation into the alleged corruption scheme. No new investments in another group until acquisition versus company and its individuals are clarified. So this is the French company, Total Energies. Sort of, I think, must be a disclosure to exchanges or maybe a comment to the media, what we are picking up at this point in time. Okay, let's just talk about SBI Cards as well. Stock's up about 2.5%, 3% odd. It's been a big underperformer. Is there a bit of a turn, especially the backdrop being the festive season? Card spends are looking a little better. Abhishek is here with detail. Abhishek, put it in context.
Well, Prashant, RBI comes out with their monthly data on the credit card, and this time around for October 2024, it shows that spends have increased massively on a month-on-month basis. So for the industry as a whole, the card issuance that continues to soften up. It's now up 12.9% YOY and about 0.7% on a month-on-month basis. However, the spends have increased by 13% YOY and about 14.5% on a month-on-month basis. So if you take a look at the calculation, the average ticket or the average spend per card is up 13.7% month-on-month. So after a long time, you are seeing SBI Card outperforming the industry rates. Card issuances are up 1.1% month-on-month versus industry growth rate of 0.74% on a month-on-month basis. The spends are down 10% YOY, but it's increased 14.9% on a month-on-month basis. So average ticket size of spends have increased by 13.6% month-on-month. So they have seen a gain with respect to their market share. So card market share is at 18.53% versus 18.46% in the previous month, and the spends market share has increased to 15.78% versus 15.72% that they had the last month. Back to you.
Thank you very much for that. Dipan, come in on, SBI Cards if you must, and also on the Mumbai real estate. We were having a chat earlier with the Keystone Realtors. And, they were saying that there is a real case that affordable housing comes in, or the government, like we've seen in developed countries, builds properties and then rents it out to the private sector to manage this whole rental, business. I mean, there are tangible ways in which Mumbai's real estate market can get a boost from this political continuity. What would your thoughts be?
Rima, on the real estate front, I think, trying to build mass housing and give it on rent, I'm not sure the Mumbai-based real estate companies would make that much of a profit, or it's a big opportunity for them. But yes, I think we are positive on real estate companies, and within the Western region, Macrotech remains the top pick. And I think Oberoi also has a solid business model, fewer projects, but big money for the bank is the strategy. And on SBI Cards, it's a company in which we invested for many years, but it never lived up to its true potential, because although the top line kept on going higher because of higher spending on cards, the NPAs were always going up higher and higher, well beyond analysts and our expectation and estimates as well. I don't think that has changed. But yes, the stock has corrected significantly. Valuations are reasonable at sub 30 times trailing 12-month. And once we find that there's a kind of a steady state as far as provisioning is concerned, then we may see a rally in SBI Cards. I would never write it off because it's a great business. But it's just that the the NPAs over there kept on shooting up beyond what the management also was expecting. So let's just wait and watch and see how the next 2 quarters roll out in the NPA front for SBI Cards.
Okay, fair enough. By the way, there's a bit of an inch up on the market again. The gain was 300 points when we began the show, and now we're back to about a 350-point gain. So it's good going. And the gainers include Axis Bank, Lever. These are stocks that have moved in the last half an hour or so, where they're adding to the Nifty's tally. There's also ITC. ITC has been sluggish, otherwise only 0.5% gain. But again, you're seeing many of them now climb to the highest levels of the day, which is why things are looking a little better for the Nifty. Some of the names like TCS also, even HDFC Bank. So all of these index heavyweights have added a few points in the last couple of minutes. Deepan, so we were talking about railway stocks earlier, but even beyond railways, okay, we spoke about SBI Card. Let's talk about SBI itself. SBI and other PSU banks are very, very supercharged, turbocharged in today's market action. But if you were to allocate fresh money to banks, how would you break it up between SBI, the other private sector names, and any tier 2 PSU stocks, if at all? PSU banking stocks, that is.
See, Surbhi, I think if investors underweight in banks, and we are not, so I don't want to allocate any more capital to banks. If an investor's underweight banks, then I think PSU banks are a good bet for him, especially tier 2 PSU banks, right from Bank of Maharashtra, Punjab and Sind Bank, and all the other banks. I think they are still available, very attractive. SBI also is a great investment from that point of view. But, medium to long term, we feel that banks will just about remain market performers or slight underperformers. The entire industry is becoming more and more like a red ocean. And what kind of growth rates the private sector banks, the likes of HDFC, Kotak had earlier, I think those best days are well behind them. And a lot of catching up has been done by the PSU banks, and there's a lot of competition from new generation private sector banks, like the IDFC Bank, IDFC First, and AU Small, and so many other small finance banks. So I'm not that positive on the banking industry prospects from an investor's perspective. And in fact, it is going to be our endeavor to gradually reduce exposure to banks over the short to medium term and look for maybe other businesses, maybe industrials, maybe platform companies, pharmaceuticals, because by and large, last 5-7 years, banks have really disappointed investors in terms of returns.
Some names, Deepan, that's an interesting call. You want to move away from banks to something that could be sort of a more attractive investment. So name some stocks before you leave us this afternoon.
So, we spoke about Zomato. It's the ultimate platform company that we like a lot. And then there are other companies. These are not recommendations. These are, we have got sort of investments in them, or we will be considering investments in them. But, likes of India Mart, Zaggle Prepaid, Affle India, Just Dial, these are companies which have got great opportunity to scale up very well and great operating leverages as well. They are consumer-facing businesses, some of them, and they've got good competitive moats as well. You could add a Route Mobile to it as well. So I think that's where we are trying to focus on right now. These companies, of course, the growth rates have come off, and some of them, there are some disappointments in these quarter numbers as well. But I think with a 3 to 5 year view, I think these companies can really deliver good value and good wealth creation.
Thank you, Dipan, for joining in. Just on the subject of PSU banks, Nomura is betting on 2 large PSU banks. One is State Bank of India. Their target price is at, I think, 1,050, where they say SBI has lower exposure to problematic segments in unsecured retail with no meaningful exposure to microfinance and credit cards, because credit cards is anyway listed as a separate subsidiary. Even their unsecured personal loans are predominantly to salaried government employees and therefore lower risk there. And for Bank of Baroda, they highlight how the price to book is now at 0.9, making it fairly attractive. But Dipan, thank you very much for joining in. We'll get into a break. We'll come back and invite Trideep Bhattacharya from Edelweiss Mutual Fund on the other side. Stay tuned. Welcome back. The mid-cap index is up nearly 2%. Afcons is seeing some buying interest in terms of the PSU banks on the mid-cap end of trade. You've got Central Bank, IOB. These stocks are going pretty strong. Even a UCO bank or an Indian bank, 5-6% gains on many of these, mid-cap PSU banks. Trideep Bhattacharya from Edelweiss Mutual Fund is now joining us on the show. Trideep, the big question is, will this two-day rally fizzle out over the next few days? Because Q2 earnings were disappointing. There is a lot resting in terms of the earnings recovery. We've seen some downgrades. Or do you think this mandate, we will, because of this mandate, this resounding mandate, we will see a big capex push, and that should help this rally being a little more long-lasting, a little more durable?
Yeah. Good afternoon. Thanks for having me on your show. I would put it like this, that the earnings pause that we have been seeing in Indian markets for the last 2 quarters, not just in Q2, but also in Q1 and Q2, is driven by a lot of lack of decision-making from the government, and also some weather conditions and a few others, which I think post the political mandate that that the ruling party got in Maharashtra, it gives a bit of a solace that in the second half of the year, the government and the authorities would be back to decision-making, back to the capex drive, and hence in the back half of this year, we would see earnings upgrades coming through. The whole reason why the market was correcting was because there's been an earnings cut of somewhere between 5 to 7% in first half of this fiscal year, which I think will reverse in the second half of this year. So immediately it will do, the markets will do what it will do in the very near term. But I think over the next 2 quarters, I do see some bounce back coming through on the back of some rebound in earnings that we missed out in the first half of the year.
Okay, all right. Hi, Trideep. Good afternoon and good to see you in. So what do you buy? What's your top sector that you're bullish on?
So basically, over the last 3 to 6 months, we have added to IT. We have added to rural part of the consumption, which I think is yet to play out, will most likely play out in the back half of the year. And third, financials, particularly private sector financials with sort of strong liability franchise. These are the 3 areas that we have added. And the final thing I would add is real estate. So these are the 4 areas that we have added on the back of either price action, which has been down, or for that matter, our relative conviction that earnings will bounce back relatively stronger as we get towards the back half of this year.
Okay. All right. Trideep, hi. Good to see you here. So, we've just been discussing this whole buzz around quick commerce, and it's hard to ignore, right? Because there's just way too much going on in this space. Quick commerce / food delivery, basically new age platform companies. Now you have 2 to choose from. And then you have a whole host of other internet businesses as well. What thoughts here?
So my sense is that quick commerce left on its own will cause disruption in the consumption retail space. The reason I say left on its own is because at some point you might see regulation or governments coming in to kind of think about the welfare motive of the traditional retail and the mom and pop stores. But barring that, the business proposition of quick commerce, and particularly some of these do really make money, so there's a strong business proposition as well, remains quite strong. So on its own, I would kind of prefer the quick commerce, particularly in the urban market, if you ask me. In the rural market, still there is room for traditional retail to really come through. We ourselves are betting on some of these names in our portfolio meaningfully, and we think they will do well over the medium term.
I got that. Trideep, just a quick word on, your, I don't know if you own these city gas distribution companies, your IGL and MGL. Any thoughts at all? I think you don't. But your
I think about a couple of quarters ago, we sort of took a view that it is better to sort of stay upstream when it comes to oil. Structurally, we had have been negative on oil and oil-related sectors. That's one of my biggest underweights in the market if you sort of look at it versus that of other sectors as well. I think by and large that has played out. Some of these things with regards to gas, the APM cuts and whatnot, though not fully anticipated, but it was a kind of it was worked in direction with regards to where we are. Where we are actually betting on the other side of it, where we think that overall, this might, given in the regime where populist measures are kind of gaining a bit of popularity overall across the country, we might see net on the other side consumption, particularly rural consumption, might actually see some boost coming through in the second half of this year, given better monsoons, better harvest, and hopefully kind of a better half of the year with regards to weightage relative to the full year. So we are betting on the other side of the basket, which is the consumption, rather than the commodities side.
What about real estate? What's driving your upbeat, bullishness on real estate? And which one are you betting on? Pan-India players? Is there a regional bias?
So basically, I think we are in the middle of a 5 to 7 year upcycle in real estate. And this is driven by the fact that if you look at housing unsold inventory across the country, it is still at meaningful, close to 10-year lows. That means hardly any inventory in the system augurs well for the overall sector. This is, of course, after a decade of consolidation and regulation that we have seen. The other part that might come through is if interest rates do really come back a little bit in the new calendar year, then they would stand to benefit. The third area that I would say that because of price action driven by the fact that the intersection benefit was taken away, we got some of these shares actually relatively inexpensive versus their own past in the past year or so. That also prompts the action. Real estate has two components, direct and indirect. Direct, i.e. the builders, indirect, i.e. the building materials. I think the entire chain over the next 2 to 3 years might actually see better days ahead, even though they have done relatively better in the past as well.
You mentioned consumer, Trideep. Just expand on that, because that's where there's a big debate, right? That there has been a slowdown, there's a problem with urban demand, but you still have stocks like Trent and Indian Hotels in your portfolio. And I mean, to be fair, they've been reporting great numbers as well. So what do you forecast? Right now, it is still financials and I think capital goods. I was looking at some of the strategies like the mid-cap fund or the flexi-cap funds. Financials still get top billing. But what exactly are you sort of planning on consumer and what do you like here?
Yeah. So within consumption, basically, our orientation is more toward discretionary than staples so far. That probably explains some of the names that you mentioned as bigger proportions of our portfolios, and they have done quite well because we think the luxury end of the spectrum and over a period of next 6 to 12 months, the rural end of the spectrum will actually do well. Everything in the middle, which is urban consumption, or for that matter, the lower middle class in urban basket, or basically the middle income, so to speak, basket, might actually see a bit more of pressure going forward. So barring that bit, we are overweight on the others, which is by and large, this barbell approach has by and large worked with us. We think as we get to the second half of this year, with more auspicious days, whether we call it wedding or more occasions generally, we think that earnings will actually gallop in the second half of this year of some of the companies, particularly in the discretionary side, that will kind of that are exposed to that. So that's well. I also think that FY26 would be a decent year for consumption as well, given the low base that we have been seeing for the last couple of years. So maybe it takes a bit of time to play out. But consumption is one to kind of for the next 12 to 18 months, we are keeping an eye on.
All right. Trideep, we'll leave it there. Thank you very much for joining us. Good speaking with you and a pleasure having you here on the channel this afternoon. Let's shift focus to IGL. The stock is up about 3.5–4%. They've increased prices, long awaited. Sonal is here to tell us more. Sonal.
IGL has gone ahead and increased prices across geographies, barring Delhi. So the price hike is between 1.5 to 4 rupees per kg in different geographical areas up north. But remember, they have not taken any price hike in Delhi. That's where CNG prices remain at 75.09 rupees per kg. And Delhi is the biggest market for them in terms of volumes, around 70% there. But do remember, we do have the assembly elections coming up very soon. So maybe ahead of that, the company has not gone ahead and taken price hike. So the real action could be seen after that. But on the 30% volumes, the price hike is anywhere between 1.5 to 4 rupees per kg. That would mean a price hike between 2 to 4.5%. But according to calculations, these CGD companies have to take a price hike between 8 to 10%. So this is not sufficient. And above that, it is taken only on 30% of the volume. So it is not something that analysts were expecting, or it is not something that would maintain their margins. However, volumes could remain constant for them or even grow from these levels. But yes, the street is happy that there is some price hike which has come by, so it could protect margins, but not as much as required to maintain the margins at current levels.
Okay, all right. So, yeah, some kind of lift up from the lows, but perhaps these price hikes are not going to, mitigate the damage and the pain entirely, not anywhere close. For the time being, of course, stocks managed about a 3% up move. Let's move on then. Arnab Mitra, India consumer analyst at Goldman Sachs, spoke to us earlier today over the consumption sector. As we take the next break, let's listen in to some of the views and what they like in the consumer space.
Actually does believe that we should start seeing a cooling off of food inflation somewhere in the March quarter. As we speak, in the December quarter, I do not expect trends to change significantly, but we do not expect it to worsen, but it would probably not improve. And it would be somewhere in the March quarter where the catalyst would be a gradual easing off of food inflation, which leads to the urban consumption starting to come back in. However, the other factor in consumer staples has been this very sharp spike we have seen in palm oil prices in the last 6 months, which is impacting margins of many companies. Commodities spike has been extremely sharp in the last 6 months. And as it always has, FMCG companies take 6 to 8 months to pass on pricing to the consumers. So we are also seeing a margin pressure, which in our view is transitionary. And once the pricing increases are taken over a 6 to 8 month period, we've historically seen consumer margins come back to where they were. Industry, like many consumer discretionary industries, is extremely attractive. So we have seen increase in competitive intensity in many categories in the consumer discretionary side: jewelry, paints, fashion retailing. We've seen a spike in competitive intensity. The industry itself is in really strong tailwinds. So the revenue growth for the overall jewelry industry remains extremely strong, probably one of the strongest within my coverage. We expect December quarter to also be very strong after an extremely strong March quarter. So our view is that if the underlying industry trends are very strong, there is room to absorb more competition. So our view is not that competition is going to ease in any way. Competition will remain high, but the industry growth is good enough to absorb more competition.
India is such an important part of AMD when we look across our, all of our, global portfolio. It's been a remarkable experience. I mean, if you think about all of the things that have changed over the last 10 years.
Welcome back. Well, the markets are holding strong. We're up close to around 300 points. The stock we should focus on really is Shree Cement. We're getting some source-based information that's coming in. And the ROC has submitted its inspection report on Shree Cement. The ROC report doesn't highlight any major corporate governance issues at Shree Cement. Now, this is important. We'll try to get you Timsi, and she'll give us further details. Remember, post that income tax, inquiry that came on Shree Cement, the stock actually had derated. So if this is the case, and if it's moving in the right direction, then in fact, this overhang, at least for the time being, goes off the stock. So I think this is big news that's coming in on Shree Cement. We'll try to get you, Timsi, to exactly, tell us how do the legal proceedings move from here on? And also maybe we could try to get in the management, to comment on this. But keep an eye out on Shree Cement. It's gone through a period of derating. Can this be some kind of relief? So keep an eye out on that. But as always, it's that time of the day where we have Nimesh who joins in. Nimesh, tell us, what are you picking up? Today is a good trading session.
Oh, absolutely. While it's days high, but I will say it's a good session because there is momentum, and we saw big momentum on Friday as well. So in a way, we've already seen a 700, 800 points of rally on the Nifty. So a bit of profit booking is very much likely. Yeah. As far as flows are concerned, there was a mid-afternoon basket selling. But again, last half an hour is going to see a big flow because of the MSCI rebalancing that is close to $2 billion. So, of course, there is a bit of pre-positioning there as well. But I guess still that flow will be quite important. From a sector point of view, I guess some bit of risk on seems to be back. So the PSUs have done well today. The index is up nearly 3%. The broader markets too have done well and have bounced back very sharply. A lot of individual names are doing good. So it looks like some bit of momentum is back. And there is a bit of risk on as well. And and rightly so, because this was a big mandate that we saw on over the weekend. And maybe, now, I guess, from a trigger point of view, the capex revival is something a lot of investors are talking about. That is something to watch very closely. And also the monthly indicators, the momentum indicators will be very important to watch out for that. Because of Diwali season and festive season, the October-November data is expected to be quite strong. So maybe at the margin, you'll see some good news on the monthly indicators as well as looks like the FI selling could be close to an end. So maybe that could help as well. So these are the triggers to watch for the December series. But I guess, well, off highs, but I'll say it's a good day of trade. And looks like the momentum is back in broader markets and PSUs.
And the bulls were starved of good news. So, looks like this mandate has turned around sentiment for the time being. And hopefully, as you said, some of those indicators, they start flowing in, which will give some more confidence. What about individual stocks?
So, Nigel, now that the earnings season is over, plenty of blocks and plenty of fundraising is going to be, it's going to be the season of December. It's going to be that. So, first stock is Zomato. Well, the stock is buzzing in trade today because of the sensex inclusion. There's going to be a large inflow. But now understand there's going to be a large block deal in Zomato very soon, a likely clean-out trade from one of the strategic investors. And also for Zomato, even a $1 billion domestic QIP is also pretty much around the corner. So these are the things to watch as far as Zomato is concerned. The second name is Samman Capital. Post quarter 2, we got the management last week. They spoke about growth going forward. But for the near term, I guess the stock is buzzing on the back of very strong buy flows. After a long time, some bit of institutional interest seems to be back. And I understand a leading long-only fund has been an active buyer in Samman Capital of late. The third name is KEI Industries. Again, the QIP has been pending for a long. It looks like that's around the corner now. So again, while the stock has been consolidating, I understand the QIP is around the corner and the company is likely to raise funds very soon. And the last is Optimus Infra. Thinly traded stock. It's not a small company, so to speak. The market cap is close to 5,500 crores. Even there, my sense is the company is very close to raising funds via preferential issue. So some market investors are likely to invest in the sense and watch out for a big fundraising in Optimus Infra as well.
Thank you, Nimesh, for that. By the way, on HDFC Bank, there is a little bit of a lift up, perhaps on account of the MSCI related inflows. So the stock is now up close to about 2.1%. Exactly at 3 o'clock, you did see a bit of a spike coming through in HDFC Bank, though in the other names where there is expected inflows like BSE, Voltas, Kalyan Jewellers, Alchem, these stocks perhaps are seeing a bit of profit booking. Sell on news. Mitesh Thakkar is now back with us for a few BTST trades. Mitesh?
Yeah. Ashok clearly something has come on my radar. I think very strong closing just near the day's high. So BTST here with the stop at 233 for targets of 239. And the other one is Crompton. I think that's also getting past important short-term moving averages. So could see some follow through. So BTST here with the stop at about 401 for targets of 4112.
By the way, there's a fair amount of profit booking in these MSCI-related names, ex of HDFC Bank. BSC has slipped about 4-5% in the last 15 minutes. The stock is now down nearly 2%. The other one is Voltas. That's down nearly 1%. Kalyan Jewellers has come off significantly from the day's high, 6% off from the day's high, as the stock is slumped 1.5%. And the other one is Alchem Laboratory. That too is down 1.5%. Exactly at 3 o'clock, you've seen these stocks sell off. Despite the MSCI-related inflows, perhaps all the pre-buying was done. Siemens is in focus ahead of its Q4 SY24 results tomorrow. Vamakshi joins in with the expectations. Vamakshi.
Well, absolutely, Rima. Good set of numbers is expected to come through from Siemens. Revenue is expected to come in at 6,526 crores. We're expecting an uptick of somewhere around 12% out here, but the margins overall are expected to see an improvement from 12.06% seen in the same quarter last year as compared to 13.9% that we're expecting this time around. Net profit is expected to see an uptick of almost 25% coming in at 717 odd crores. Largely, the expectation is that healthy execution could be witnessed in the energy as well as smart infra segments. A margin improvement is expected for all of the segments for Siemens India. The EBITDA margin is likely to improve, mainly driven by operating leverage, better pricing power as well as product mix. As far as the management commentary and outlook is concerned, we will be watching out for management commentary on the energy business demerger, execution process of the large locomotive order that they received, the outlook on their tendering pipeline, especially in the energy segment, and the status of the HVDC ordering. So overall, good set expected to come through from Siemens, and today we're also seeing some rub-off effect from the wind in Maharashtra.
Okay, and that stock's been surging away, given the sentiment in the market and then, of course, expectations of those results tomorrow. Speaking about the Maharashtra elections and sort of the mood after that, we did catch up with the whole panel of experts, including Ashok Bhattacharya of the Business Standard, who says that rising welfarism, especially focused on women, can have a bit of a national impact. That could be a bit of a a side effect of the current state of political affairs. Listen in.
This election, not just in Maharashtra but also in Jharkhand, underline once again the important role that welfarism plays in electoral politics. Earlier, we used to think that welfarism is an important tool in electoral politics, but now it seems that it has become a critical tool in electoral politics. And that is what even Mr. Shinde also referred to, which is reference to the Ladli Behna program. The focus of welfarism is this election, the assembly elections, was largely on women, and that recognizes that women are becoming an even more critical segment in electoral politics. So therefore, going forward, you will see more welfarism. Of course, this may be bad news for states which cannot finance and fund these schemes. So that is a big question mark, and it will maybe have an adverse impact on even national politics. So in all these concerns, I would say that welfarism is what I think is the lesson that I would draw from a political economy perspective. The BJP will become more assertive and aggressive, and also it will reflect in the kind of budget that we'll see in 2 months from now. It will also reflect in many other economic policies, and I have a feeling that even at the national level, economic policies will probably draw the lessons that electoral politics have seen in these state elections.
Welcome back. Just keep an eye out on HDFC Bank. That's the big one. And there, if if I can see this correctly, it's almost on the verge of going to around 1,800 rupees mark. And I think it's a 52-week high actually for HDFC Bank. Because the last time around it went to these levels. Yes, it's the 52-week high for HDFC Bank. And that's the one that's leading the markets higher. HDFC Bank has been the one that's out of form. That's found its form. That's been the leader of late, holding one end up. And Reliance Industries, it's still up closer on 2%. So the last two sessions, Reliance Industries is up more than 5%. You're talking about 20% of the index doing well, which is very, very good news from a bullish perspective. But let's focus on Shree Cement. The stock has come off the low point of the day. This after sources tell us here at CNBC-TV18 that the ROC has submitted an inspection report on the company. Timsy's picking up some details. She's joining in to fill us in with more. Timsy?
Well, as you remember, the ROC had initiated an inspection against Shree Cement in the books of accounts, looking after all the various issues, especially when it comes to the corporate governance matters. This was based on MCA asking ROC to do this sort of an inspection. And now what we are given to understand from sources that ROC has submitted its report, the inspection report, to MCA on Shree Cement, where it has not found any major discrepancies or any issues that need to be flagged in a major way against Shree Cement when it comes to corporate governance matters. Remember, this entire action took place after IT department conducted survey against Shree Cement, and these surveys were conducted way back in June 2023. Post which earlier this year in beginning of 2024, we heard that the IT department has actually handed over a 4,000 crore rupees tax demand notice to Shree Cement. And given all of this, this particular inspection was happening at MCA simultaneously to look into any corporate governance issues. And now when this report is here, we are now given to understand that now DG investigation under the MCA is going to give a detailed analysis based on ROC's report to MCA to take a formal call as to what needs to be done on Shree Cement. As of now, ROC giving a clean chit is something that we are picking up. But yes, what is it that finally DG investigation, DG MCA submits it to the ministry is something that we'll keep you posted on. Back to you.
Okay, Timsy, got it. Thank you very much for that. So Shree Cement on the radar. Gurmeet Chadha from Complete Circle is with us. Gurmeet, hi, good afternoon. Great to have you on. I saw your post right on the Maharashtra election, and I think it was really telling, and you put it up so simply that this is a state that contributes in such a big way to national GDP and to the national exchequer as well. So perhaps, a way forward on development and infrastructure reforms would be great for the country as a whole. Let's boil that hope down to stocks and ideas. We're seeing the sentiment play out in the market today, but would you pick anything from the infra space, given the mandate?
So yes, I think spending has been slow. Central government also has just spent 4 lakh crores out of 11 lakh crores. So you'll see a bit of a pickup in H2. Also, as I said, women welfare will now be a very dominant part in state and national elections and in budget. And I think that's one pocket has to be represented in the portfolio. So it's been very heavy on urban consumption for the last 3 years. Defense, cap goods. Probably it may go back to staples, it may go back to home improvement, kitchen appliances. More money in the hands of women would also mean more expenditure and rural recovery related themes. So I think I'll be positioning there. Also, we have a huge wedding season, 40-50 lakh weddings. So some of the hotel, liquor, etc. stocks. I think the portfolio stance now has to change, and maybe a bit of IT should be, because wage growth has moderated. US will have corporate tax cuts. There'll be more money to spend on tech. So you've got to now change the positioning of the portfolio a little bit and maybe get back into things which were not looking that too great till about a few months back.
So in this, hi Gurmeet, in this women welfare related plays, the staples, etc., the essentials, which particular stock would you bet on?
So we have one which is Stovecraft, which is into largely household kitchen appliances. This year they have guided for almost 1,600 crores. The margins have gone up from 8.5% to almost 11%. Good capital allocation happens. That's something quite good. I would also want to see some, religious tourism related plays. Could be in form of hotel, in form of, IRCTCs of the world. And you have to dig into companies which are more into food, especially the Tata Consumers, the LT Foods, etc. of the world. And maybe few names, maybe some stock market participation also eventually in the long run.
Okay, welfarism is here to stay, as A.K. Bhattacharya of the Business Standard was just saying as well. He was, of course, commenting on the election results over the weekend. Gurmeet, stay on. We'll have, of course, more questions for you in Markets Forward in just a bit, but we have to recap today's trading action as well. And it's not been a bad day at all. The market's not closing at the highest point of the day, but nonetheless, 350 points after what was a very solid Friday. Remember, the market rallied expecting good results for the NDA going into the weekend. So on top of that, we've got another 350 points today. The top billing goes to the PSU space. In fact, if I talk about some of the best indices or the sectors that have done the best, then it is the PSU banking index, even the PSE index, which have had a very, very good run. Boil this down to individual names on the Nifty: ONGC, BEL, BPCL, SBI, lots and lots of PSU names out there. Beyond PSUs, L&T's had a very good run, 4.5% higher. Shriram Finance, 3.5% higher. And of course, the banks cannot be left behind. HDFC Bank, ICICI Bank, TCS. So actually, a lot of the index heavyweights have powered up on the upside today.
Well, on the way down, not too many. JSW Steel deserves mention. Top Nifty loser, 2.3% gone, as it will be replaced in the sensex by Zomato. IT names a bit on the back foot, correcting after Friday's big rally. Tech Mahindra, Infosys, HCL Tech ending in the red. And outside of that, Maruti Suzuki and Bajaj Auto 2 down nearly half.
Well, it's a fantastic session all told, and really nothing to take away from the fact. I mean, you can nitpick and say, well, we did not, it was not a 400, 500 point move, but actually it's a good thing because, it leaves something on the table, hopefully. Although, already with this 300 point gain and of course Friday's 2% rally, it's turned out to be pretty good last 2 days or so. I think we're going to wrap up the program here. Thanks very much for staying with us, but don't go anywhere because Rima and I'll take you through Markets Forward. Gurmeet is with us and we'll have other guests joining in as well. That's coming up. Stay with us.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.